Small business inventory loans for small business owners. Call 888-653-0124 today or click the link in the description to learn more. https://www.onlinebusinesslineupcredit.com/small business inventory loan/. Are you a small business owner who needs inventory financing? Have you considered using a small business loan? There are several reasons businesses need small business financing. Challenges small business face include they may not have enough cash flow to purchase new inventory, they may need to expand their business by purchasing additional equipment, or they may need to invest in advertising or other marketing strategies. The good news is that there are options available to help small businesses grow and succeed. One option is to apply for a small business inventory loan. Why small businesses need inventory loans? An inventory financing loan can finance the purchase of existing inventory, such as raw materials, work in process, finished goods, or even accounts receivable. The advantage of an inventory loan over traditional bank loans is that it allows smaller companies with limited credit. The basic principle of an inventory loan is to lend money against your inventory and collect interest on the amount you have lent. This means that a company will borrow money from its lender to purchase inventory. Once this inventory is purchased, the company will pay back the loan plus interest. The borrower then sells the inventory at a later date and repays the loan. If the inventory does not sell, the company must continue paying off the loan until the debt is repaid. Types of inventory loans available. There are many types of inventory loans available. These include secured, unsecured, factoring, and term financing. Secured inventory loans require collateral, such as accounts receivable or inventory. Unsecured inventory loans don't require collateral. Factoring involves borrowing against the future cash flow of your business. Inventory financing companies allow you to borrow money based on the terms of your contract with your customers. Inventory business loans are usually offered through banks and other lending institutions. However, these lenders charge high rates of interest. In addition, if you default on your payments, you could lose all of your assets. This business loan option is best suited for larger companies that already have established customer relationships. It works well when your company has sufficient sales to generate significant monthly revenue. How to get started? To get started, you first need to determine how much inventory you want to buy. You also need to decide what type of inventory financing you would like. Do you plan to use the funds to purchase raw materials, work on process, or finished products? Once you know what type of inventory financing is right for you, begin looking for a reputable financing company. Look for one that offers flexible payment plans and low interest rates. You should also look into whether your current lender offers inventory loans. Many offer them, but most only allow you to borrow up to 50% of your total inventory value. Also, be sure to check out the APR, annual percentage rate. Your rate should be less than 10%. When applying for a loan, make sure you provide complete information about yourself and your business. The more details you provide, the better the chances are that you will receive approval. You might use a professional who specializes in working with small business owners. They typically charge a flat fee per transaction, which makes them easier to deal with. A good inventory financier will guide you through the process and keep you informed throughout the entire loan application process. Be aware that some inventory finance companies do not disclose their fees until after they have received your documents. Make sure you understand the terms and conditions before signing any paperwork. If you choose to go it alone, make sure you have enough capital to cover the cost of the inventory you want to finance. This includes the price of the product, shipping costs, and any additional charges. When to apply? Apply for an inventory loan when you need to expand your inventory. If you are planning to increase the size of your inventory, apply now. Otherwise, wait until you can afford to pay off the loan. It is important to note that you cannot take out multiple loans at once. Therefore, you must decide which of your existing debts you want to pay off using this new loan. The sooner you pay back your debt, the lower your overall interest rate will be. You can save money by paying off your debt as soon as possible. The time you have to repay your debt depends on the type of inventory financing you select. Some types of inventory loans last anywhere from 6 months to 2 years. There are many advantages to getting an inventory loan. However, there are drawbacks too. For example, some lenders require collateral. You may not sell all of your inventory if you need to repay the loan. Also, you could lose control over your inventory while you are borrowing against it. In addition, you may not benefit from tax deductions if you use this method of investing.